Welcome to a new episode of Casey Invest. Have you ever had an excellent credit score, but your mortgage loan for your new home was denied? Or are you hearing that the house prices are dropping and you're starting to plan to buy your new home? Before that, if you don't know your DTI and is above 45, there is a high chance that your mortgage loan could be denied. DTI, well, in simple terms, is a way to measure how much money you owe in relation to how much money you earn. Why is this so important when you are buying a house? Because lenders want to make sure that you can pay your mortgage without any problem. So let's start calculating the DTI, and to make it simple, we're going to consider without the mortgage. We're going to start considering the income that you see here, and let's suppose that your family annual income is $80,000. If you want to get the monthly income, you just have to divide it by 12 and you get the result of $6,667. On the other hand, you have to consider the debt. Let's suppose that you have your credit card debt, car loan, and student loan. In that case, it is important to mention that the credit card, you're just considering the minimum payment monthly amount that you see on your statement. So in that case, let's suppose that you have $500 in credit card debt, you have car loan, $300, student loan, $200, and the total is going to be $1,000. Then, if you want to calculate it, the DTI, basically you have to consider your total monthly debt of $1,000 divided by your monthly income, and you get the DTI without the mortgage of 15%. So you know how to calculate it in a simple way, the DTI. Let's suppose that you found your dream house, and we're going to start considering the mortgage. In the first scenario, we're going to consider that for that house that you found, it's going to be $2,000. Then you have to get the monthly debt, including your mortgage, that is going to be $3,000 if you consider the $1,000 of debt that we calculated in the last exercise. So to get the DTI is basically $3,000 divided by your monthly income, and your DTI is 45%. In that case, most of the lender will approve it without any problem. It is important also to mention that there are other factors that you have to consider, like your credit score or your credit history, but considering only the concept of DTI, with that number, they're gonna probably approve it. Then going with the scenario B, let's suppose that you found another option of your dream house, and it's gonna be, the monthly mortgage is gonna be $2,300. In that case, your monthly debt, including your mortgage, is gonna be $3,300, and your DTI, basically the division of your debt and your monthly income, is gonna be 50%. In that case, we have bad news. Basically, the lender will not approve your request. Now that you know how to calculate the DTI, let's see 3 real scenarios so that you can make informed decision on how to prepare to buy your next home, considering the interest rate. So in the first example, let's suppose that you are not going to do anything. You're going to just stay until the government or the bank decrease the rate. In that scenario, basically you have your annual gross income still with $80,000. You have your monthly gross income, your debt payment of $1,000, your DTI 15%, and let's suppose that you found a house in Miami. The price of the house, of a townhouse, let's suppose that is $400,000. Your monthly property tax is 1%, so it's gonna be close to $333 monthly basis, and your monthly insurance is gonna be $2,500 per year, so it's gonna be $208 per month. In that scenario, let's see this table. You have the price of the house here, you have your mortgage rate, and there are different mortgage rates that I'm going to start explaining. You have your monthly mortgage with those rates, with this value that you see in this column. Then you have your monthly debt, including your mortgage, and your DTI with that mortgage. In that case, if you don't do anything to afford the house of the $400,000, what you have to do is wait until the mortgage rate goes down until 3.5%. So in the second example, let's suppose that you are proactive, you are able to take action on it, and you don't want to just wait for someone to take decision for your future. So you start working as a part-time and you are increasing your annual gross income. In that case, if we suppose that you are working part-time and you are gaining $300 per week, your annual gross income is going to be $94,400. Your monthly gross income, $7,867. And let's suppose that you are keeping your budget, your monthly cost, your debt on $1,000. In that case, considering this same house information of a townhouse of $400,000, the scenario that we see here, now considering your new annual gross income with a 5%, you are able already to start buying that house with a DTI of 44.68%. So in this third scenario, let's consider again that you are proactive and taking action. In that case, let's suppose that your income has increased to $400 per week, just $100 addition compared with the last scenario. The increase of $100 per week, basically your annual gross income is gonna go to $99,200, and considering the same house information or the same dream house that you found, you don't have to wait until the mortgage rate decrease, because now you can afford a mortgage rate of 6%, having a DTI close to 45%, and probably this is the mortgage rate that we have now considering April 2023. Throughout this video, you can see how a few extra dollars per week can increase your chance of buying a new home immediately without having to wait for the government or other people's decision. Knowing is wisdom. So I invite you to prepare in advance for the purchase of your first or second home. Don't let your future and your family's future depend on others. And if you are looking for an experienced real estate agent in Miami or Broward County, I will leave you my contact information so that I can support you in your next home selection. I hope you have learned something new today, and don't hesitate to subscribe and share this video with your friends and family. Next week, I will be back with more videos on my KC Invest channel with new financial and real estate tips for the future. Thank you.